And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. The S&P in breakout mode. Once again, up over 6% in the last 4 weeks, hitting historic highs. Several days in a row now, the market is rotating as we're seeing new highs in several key cyclical sectors like tech and industrials, for example. And by the way, it's not just the U.S. Surprisingly, we're seeing some breakouts on a more global scale as well. What do we make of all of this? Joining us now, Nick Colas. He's the co-founder of DataTrek, Steve Grasso, Stuart Frankel, and Deborah Fuhr, founder of ETFGI. The important thing here, Steve, is what amazes me about this is we're hitting new highs in cyclical sectors. Wait a minute, we're supposed to be in a global economic slowdown, and industrials are hitting new highs, tech's hitting new highs. Are we getting the rhythm of the global economy wrong? What's going on?
I think it's a matter of people are reaching for things that were supposed to be down, things that were, they've given up the ghost. And to me, it's either one of two things. It's always binary in an event. Is it that they're reaching for the last thing and it's the last gasp of the rally? Or is it just throwing in the towel and knowing that we're going higher overall? I'm gonna go for the latter. I'm long a lot of these chemical plays, paper plays, packaging plays. I don't think it's over just yet.
Deborah, you follow fund flows. You're one of the great experts in the world on this subject. What's surprising me is it's okay to say, okay, the U.S. consumer's holding up, U.S. is all right, but Europe's hitting new highs. European ETFs, the Italian ETF, the French ETF, the German ETF, EFA, Europe, Africa, Far East, new highs today, and Japan as well hitting new highs today. Do you see any enthusiastic buying in terms of fund flows here, or is this just a sort of lack of people selling that's moving these to new highs? It's a bit surprising.
Well, I do think that people are preferring ETFs over other products, and so you are seeing more money going into ETFs than any other investment product right now. And I do think people are thinking there's still more upside, right? I think they've gotten used to some of this stuff just being out there as news, like Brexit. We're all kind of sick of it. I live in London, right? So I do think that investors see many markets still having more legs to go. And China's been doing well too, right? It's probably going to be the best performing market this year, where people thought China was really a problem this year. So I think people are taking a fresh look at where they should put money to work.
I think that was one of the main things that happened on Friday, Nick. I saw a little bit of a sea change. Volume picked up Friday on an up day. That hasn't happened in a long time. So we did see better economic data, as Deborah was pointing out, not just in the U.S., but Eurozone GDP was a little better than expected. The China manufacturing a little bit better. I don't know if this is sort of a turnaround, but if that keeps up, might that sort of change the earnings outlook for 2020? We're all thinking, well, maybe it's going to be flat to up 5% or something like that. Is that a factor now in this?
Yeah, it's a huge factor, because if you look at earnings year to date in the U.S., it was negative 0.4% comps Q1 and Q2. Looks about negative 2.5% in Q3. Q4 just went negative for analyst expectations. So clearly the market's not focused on that. They're thinking about that narrative you just outlined, which is if we get a trade deal, better economic growth, and it's global, then S&P, which is 38% international, is going to have maybe 5, 6, 7% earnings growth next year.
But parts of the market are already a little pricey. You know, industrials are up, tech's up. Banks are even been rallying as yields have been up a little bit. That leaves energy. I know you kind of like playing energy on this contrary play, but a lot of people have had their head handed.
Well, I would only play it for a bounce. There's a reason why the ETF is at is lower 5 years later in performance than any other ETF. I mean, it's still red on the screen. So how can you buy something that has not had the ability to perform in a 5-year economic cycle? That to me is atrocious. But if you want to buy it on a monthly, then buy it. Maybe you get that reversion trade, but not long term, no way.
Yeah. Dollar has stopped going up. Now that's got to be some help, Deborah, to European ETFs, to emerging market ETFs as well. I know you're not a macroeconomist, but that's obviously been a factor in helping emerging markets.
It definitely has. And I do think we've also seen that people have been using less currency hedge products. So they're looking for the play out of currencies locally. So I think we've seen people historically been using currency hedge ETFs. We've seen money move out of that and taking advantage of the differences in the dollar versus local currency. So definitely.
You know the problem though, Bob, is that when we talk about this and you look at Germany, and you started off the show saying what's really changed. And when you look at German PMIs, they were just at a decade low in September. So if you look at the mirror images from a lot of these ETFs from October 2018 to 2019 October, they're mirror images. They were down 10%, they're up 10 and 12%. This to me is people saying we got caught off guard. So I don't know how much is substance versus me just trading the market.
Yeah, and manufacturing, you mentioned PMI, is much more important in Germany than it is in the United States. What are we, 12% manufacturing in the United States? A much higher number in Germany. I just want to go back to you because you're not afraid to pontificate on the dollar. Why do you think the dollar has stopped going up and is now even actually off of its highs? Yeah, is that going to continue?
It ties directly to global yields. You saw global yields hit this sort of cataclysmic low in August, like the world's over. The dollar hit a high, the fear trade was maxed out. And ever since then, we've had this slow narrative. The trade's going to get better. US and China will come to some conclusion. Next year's an election year, so there's a lot of incentive to do that. Dollar weakens, yields go up, economic growth resumes. That's the rally we're seeing right now.